Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 1st. Well, September's behind us, on to October, and it's Halloween, the month of Halloween, so Jason coming out of the woodwork probably. But I'm Eric Wilkinson. Some of you may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that all comes in to impact the markets with some market analysis. And I'm going to do the same thing for you folks out there, but I'm going to go a little bit further and talk about these option strategies I'm implementing into my portfolio based on those assumptions I come up with. We're not just picking option strategies out of the hat here, folks. What we're doing is I've created guidelines for you over my 25 years of experience trading options in order to streamline that process so you can find the right strategy rather quickly for that directional assumption. And what we're doing is we're turning the tables on the probabilities into your favor by following these guidelines and setting these option strategies up correctly. That's one of the best things we can do at the onset to increase our success rate, is setting these up properly. All right, so without further ado, let's get on with the economic data because we got quite a bit of stuff going on here. Across the pond, we did get some PMI numbers. This is Purchasing Managers Index. Remember, Purchasing Managers Index is forward looking. These are the managers looking out in time, seeing the demand come in and either ramping up production or cutting back on production. Also, further, anything above 50 is expansion, anything below 50 is contraction. So let's quickly go over it because this isn't the main numbers. We usually look for the flash numbers, but they did get some manufacturing PMI numbers here, giving us a bit of an indication. Remember, France and Germany are the leading manufacturing sectors of the European region. So Spanish manufacturing PMI coming in at 50.8, slightly higher than the 50.5. We got Italian manufacturing coming in at 53.2, expected to be 53.6. French PMI coming in at 51.2, expected to be 50.9. German manufacturing 56.4, expected to be 56.6. And the greater European region outside of those companies I already mentioned, in line with expectations at 53.7. All right, Great Britain's final manufacturing PMI coming in at 54.1, in line with expectations there as well. So everybody across the pond seeing expansion in their economies above 50, pretty in line with expectations, so not a huge disappointment there. Now, back to the United States, we got a bunch of economic data points here. We got the core personal consumption expenditure, which is the PCE price index, in line with expectations at 0.3%, expected to be that 0.3%, and they revised last month's number up, albeit just slightly by 0.1%. Personal spending ramping up a little bit here at 1%, expected to be 0.7%, but again, they did basically wipe out that positive number with a revision of last month's number down by 0.4%. All right, unemployment claims coming in lower than expected at 837,000, expected to be 850,000. No revisions to last month's number. Personal income, a bit of a wet blanket here, coming in at negative 2.7%, expected to be 2%. Last month's number, albeit, was slightly revised higher by 0.1%. Now, keep in mind, we would kind of expect personal income to be a little bit lower than what is normal, right? Because of what we just went through. And also keep in mind, people coming back on the job are going to be willing to accept a smaller pay than what they were accustomed to, right? Because they just want to get employed, right? And prove themselves. All right. Then we got our final manufacturing, we got our ISM manufacturing PMI number coming in at, ISM is Institute for Supply Management, coming in at 55.4, lower than the expected 56.0. So keep that in mind. One of the things that we did see also is one of the employment numbers there was coming in below 50, and new orders was lower than expected. So that is going to weigh on future ISM numbers or manufacturing data points, all right? And keep in mind, for the rest of the day, we are going to have the total vehicle sales, so that's going to be something to keep an eye on. Also, natural gas storage is coming in line with expectations, and we have a couple of Fed governors speaking today, Bauman and Williams. All right. All right, that's about it then on that front. Now, keep in mind, tomorrow's the real unemployment numbers that we're going to be looking at. All right, crude oil coming off by about $2, breaking out of that $40 psychological level. Something to keep in mind, that's going to bring gasoline prices below $2 a barrel, which I think is a great thing. It's psychologically nice to go up there, fill up your tank, and have it be less than, or right around $30 as opposed to like $40 or $50. All right, so that extra money is going to create velocity of money, and hopefully, that we'll start keeping this economy moving. If we're not going to get a stimulus check, we might as well cut costs on gasoline prices. No, it's not going to make up for it. Something that is needed. Politicians seem to be really, they just can't come to an agreement here. And, it being right ahead of the election, it's probably a very Sisyphean task or an uphill battle here. All right, gold futures are moving higher by about 20 points. No, that's not because we're getting a stimulus. It's just basically a bit of a flight to safety, I think. Bonds unchanged on the day. After yesterday, we really sold off. I mean, we were down a couple of points, right? And then started making a move towards the end of the day. Today, pretty much unchanged, but, slightly below this Fibonacci resistance area where I've got the Fibonacci extension, and just a regular Fibonacci on there. But having said that, those two line up quite nicely, and it has acted as a support and resistance in the past. So something to keep an eye on is that 177-ish handle in the bonds. All right, VIX is it's just in negative territory. It was just slightly in positive territory as we were seeing some equity weakening throughout this morning section so far. Now, Dow Jones Industrial Average up 120 points, but it is right there at the point of control. Now, that's where the most time and volume has been spent. Something to note, we have seen this volume node shift now back to where we currently are at 127,787-ish, right where we're trading right now. It's right in line with that, or, a bit of a swath there. But yesterday, settling above that 50-day simple moving average. Today, staying above that. Now, I've talked about it's not going to act as a major support and resistance area, but it is more of a psychological long-term indicator. This is indicating now that we're above the 9-day simple moving average and the 50-day simple moving average that we have continued that mid to short-term positive direction here in the Dow Jones. Now, do we think we're going to break out above or below that for the next month or so? No, I don't think so. I mean, yes, the debates are going to cause a little bit of turmoil or cause some volatility in this market, but for the most part, they are at where that point of control is, and that is a comfort zone for most investors. All right, NASDAQ moving higher by 125 points, again, though, off the lows of the day. Yesterday, it was looking like we had a confirmed move to the upside. Late in the day, kind of washed that idea out. But today, any settlement up in this area, up above, let's call it 100 points on the day, is going to look very positive for most traders. All right, it's going to look like we're resuming to the upside here with a bit of a cup and handle, or possibly to build out an inverse head and shoulders there. All right, E-mini S&P is up 20 points on the day and back above its 50-day simple moving average. So looks like out the window it goes for the thought that we were going to get this near-term test of that 200-day simple moving average. The market's recorrected, moving to the upside and away from that. Now, also the chart setups are looking a little bit stronger here throughout the week. This week, I thought this week was going to be a little bit more weakness. Now, yesterday, if we took this down to the 1-minute chart on the E-mini S&Ps, the NASDAQ, or the Dow Jones Industrial Average, you would have saw basically 30 points erased in 1 minute in the E-mini S&Ps yesterday. So I might as well even talk about it. Let's just throw it down to a 1-minute chart here. 1 minute. Oh, it's not going to show me yesterday. Well, we can kind of see it here. So we could see the high yesterday heading into the basically last minutes of the day, trading around 33.60, and then basically popping down to this low down here at 33.34. So about 30 points in a matter of minutes. It was like just somebody ripped the rug out from underneath everybody, and we got that free fall happening in just a matter of minutes there yesterday. It's pretty interesting to watch. All right, so XLK, you guys know this is the ETF for the technology sector. I wanted to get some exposure on this when we had that big pullback, just to get some upside in these names, and was able to close this out for a nice profit there. Better than 50% of max profit. Now, you might be asking, like, why did I squeeze this out for more than 50% of my max profit and kind of breaking that rule there? Well, it's because I actually did it as a much smaller tranche than what I normally do. So I was kind of looking at the price versus what my gains were on it, and that was throwing off my calculation in my head of what I was for a target in value in terms of money rather than in value in terms of my reduction in premium there. So with that said, October, I sold the 102 puts in there for $1.27. I was able to buy the high, at least as of this video, at 20 cents there. So like I said, a little bit better than 50% of max profit. I lost track of that yesterday. Or actually last couple of days. I noticed it yesterday when I kind of dug into it and realized that it was not quite a full tranche in there. It was about less than a half a tranche. So a bit smaller play there, but still a winner. As you can see here, we got the directional move that I was looking for, because I put this trade on the 10th of this month. So you can see when we got that sell off, this is about where I started looking for my strike location, down there at the 102 puts, which puts me down here at this value area high with the collection of credit. My break even is much lower than that. So that's what I was looking for. Even if we tested the 200-day simple moving average, which was what I was expecting, then I would have been happy to take this long, especially with what we're seeing with coronavirus, some more outbreaks. I'm sure, well, as news gets out that the Tennessee Titans are not playing the Steelers this weekend, that was going to get moved to Monday or Tuesday. Well, they have said that they are going to move that entirely out to later on in the season if they play that game at all. So with that being said, as more and more people see that, I think you're going to see a little bit more of not necessarily a panic, but realize that these people have been doing everything on point and following guidelines probably more strict than what you and I are accustomed to, even during the pandemic, have had a breakout happen. So with everybody pointing fingers at people, saying, not doing the right thing, you should do this, that, and the other thing, well, it is still a real problem that can, rear its ugly head. So XLK has been seeing more and more weakness here throughout the day as the tech sector is weakening, albeit just a little bit. We are seeing that weakness start to happen there. And a couple other things I was looking at, the Google trade that I put on just yesterday. Oh, I did just GOOG, not with the L. Got a couple of nice moves yesterday and today. I am getting a little bit of volatility start to expand, so it's not as good as it was earlier today. But if you guys remember when I put on this Google trade yesterday, I did the October and sold the 1,400 puts in there for $12.20. Earlier today, it was trading right around 8, so I decided to put an order in to try and buy it right around 7. Now we're starting to see this volatility start to rise a little bit throughout today, and well off the highs that I was seeing earlier when it was up almost 30 points on the day. So that trade, I just wanted to tell you, I do have a working order on it because I do have a bit of an itchy trigger finger on that one. I'm not going to lie. Why? Because when you are, when it's currently trading, let's see, I think it's currently trading around, it's trading right around 16, and I bought it at 12. So, you know, I'm at 25% increase in that underlying. I'm usually looking for somewhere around 30 to 50%. So it's hard to knock that when you are right around 25% after one day, right? I mean, I've gotten a couple of nice moves, a lot of things working in my favor. I'm going to hold on to this one though, because I'm pretty confident with Google to the upside. That 1400 is down here below the 200-day simple moving average. So, and I also did this a little bit smaller than a full tranche, just to keep everything on point as to how I'm really balancing my portfolio. You know, Google's a big name, and I don't want to do a full tranche in that because that would seriously overweight my portfolio. So, played this a little bit smaller than what I would normally do as a full tranche, but that also has to do with the amount of money I am looking to try and make on that trade. All right. So that's about it. Lululemon also working out quite nicely. I might as well throw up a chart of that. If you guys, I put on this for the iron butterfly that we did. That's the butterfly. I keep doing the condor versus butterfly. I don't arb it every single day, so got a little bit confused. The iron butterfly in Lululemon that I did a webinar for about 2 weeks ago. We put this, or I put this trade on based on all of the internals that we look at. Like I talked about, these guidelines set up on what my thought process was for this. Are we going to pop or are we going to drop? Now we go up and try and cover this little gap here, which I do have to get through that 50-day simple moving average, but there is a gap up there which would make this trade work out quite nicely. And if you guys remember with that trade, I did this with a, I did this as a long iron condor, sorry. So it is the long iron condor. Today is the day we're doing the long iron butterfly. So this was the long iron condor that I put on for this trade. And, you know, the wing that is going into the money now is where I'm long the Dees 330 calls in there and then short the 360 calls. All right, so as you can see, the 330 calls are in the money. It's making that trade work out quite nicely. We get up there, cover that gap, and hit my short 360 calls. Pulling the ripcord on that trade, I'll be out. So hopefully we can get that move settle above a 50-day simple moving average, and I can get out of this trade rather quickly as well. All right, so that's all I've got for you guys. Check out today's webinar on the iron butterfly. We've already done one on the iron condor, which is a long. We're playing these from the long side. If you believe there is a pop and a drop in a minute, or a drop, I should say, not really sure, but you think tech sector is going to fall out of bed or blast off to the moon. One of those two key metrics are going to happen. Maybe it's based on what happens with stimulus or some of these coronavirus outbreaks. You know, you come up with a directional assumption. I come up with the guidelines to find the right strategy for your given assumption. And you can follow these rules to see if it works for that particular assumption. All right, so that's all I've got for you guys. One last thing, though, we have to always talk about is our disclaimer. So please take a moment to go over this. And hope to see you today, this afternoon, in the webinar. You guys should take advantage of that. All right, so if you can't take that, take it easy.